Hello, 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 hello. Happy Tariff Talk Friday. How is everyone doing today? Good morning. Bull Strike Cheetah. There's a high probability that Trump will discover a new, yet to be explored level of stupidity among our European leaders. We shall see. Uh, what's your question here? I'm trying to get, these are just the orders coming up. And what's the rule regarding the maximum pullback after a confirmation? Use, oh boy, it's actually not one rule, but I'll give you a little. It's a little complex to get in here now, but let's find a double. It actually might be better when we get an actual example. But if you're measuring the right hand side after it hits the 75 level and then then you do the retracements on that side. If it closes back below the 62.5% of the up move that created the 75%, and then it rotates back up, okay, then just it invalidates double. If it doesn't close below 62.5 and it just rotates back up, it can just be a small rotation and it can still work. I'd have to find an example. Good morning, John. Good morning, Sterling. Good morning, Patrick. And again, have for people in the U.S. celebrating Memorial Day, which is on Monday, which is why there will not be a live stream on Monday. Futures have limited trading, stocks are closed, and there will be no live stream unless something. Who knows though? Because we have now Trump saying he's going to slap another 50% tariff on the EU on June 1st, and we have him announcing that he's going to, if Apple does not build iPhones in the U.S. that are sold in the U.S., then he's going to put a 25% tariff on Apple. Which I'm sorry, I got a big problem. I'm a libertarian, but now we have, and I wouldn't want government on either side dictating companies. I want you to do this, else you're getting punished by this. You know what? If Apple wants to build iPhones in India, fine. You don't want to build them in China, which you know what? We're going to build them in India. Nope, you're going to build them here. No, 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 no. No, no, no. And now you're doing company specific tariff threats, trying to tell what, and then you're going to micromanage every company with and have an individual tariffs because you want them to do something? That gets insane. Then we have government down our friggin' throats and trying to micromanage businesses. I'm sorry, I got a big problem with that. And I'm not going to shut up about that because it's fucking idiotic. Good morning, Jacob. No problem, Sterling. Hey, Charles. Good morning, Richard. Good morning, Harold. So, happy Friday. We wake up to this insanity from the administration. But, separate from that, do we have anything else? We already had Fed speak today. Uh, New home sales coming out, but that's not really going to be market moving. It's all going to relate to tariffs today. Who was speaking earlier? I forgot who was Goolsby was speaking. Uh, now just putting more fuel in the we got to wait and see from the Fed side. We got to wait and see because who knows what's going to get announced next from the tariff side. Are you actually going to follow through, or is this just a threat? Because 50% tariffs against the EU could have a pretty big effect on stuff. Or is this just another boisterous, blowhard thing that's never going to happen by June 1st? Who knows? Who knows? Just no, so much for the peaceful Friday. I'll get your question in a bit, Sterling. Good morning, Heinrich. This is a bully pulpit. I'm tired of tariffs. I am actually tired of tariffs already, too, Coco. And I don't understand. You're saying, oh, it's not going to raise prices. It's not going to raise prices. Well, you tell Apple to build their iPhones in the U.S. for U.S. It's going to make a friggin' iPhone price like $3,000. That's not going to raise the price. They can't eat that. It's asinine. So, all right. We have a lot of red today after the revised tariff talk. Intuit, though, released earnings yesterday afternoon, up 7%. So that's a little bright spot. Autodesk also up 2%. So they beat on earnings and up there. Other than that, mega caps are down. Apple down 3.5%. Groups today, utilities are the only thing that's up. Well, consumer defensive nearly flat, but everything else is down. Technology, consumer, cyclical, financial leading it way down. Still in rate cuts. Let me just revise this since we passed the top of the hour. I'm just curious to see where this sits. Still pause, and then a cut in September. Fear and greed in greed mode still, even with this pullback. And as of yesterday's close, we're still close to 36 on the show at PE, which will drop today with this pullback. This morning, there were not any real earnings, Booz Allen, but yesterday was you had Intuit and Autodesk, which beat on earnings. Intuit up again, that's 7%. Now, thank you, Jacob. That made me laugh. At least the yields are down. Yeah, the yields are down because the market's dropping because people are rushing into some treasuries, which is sort of funny. Maybe he just wants to crash the market, so then yields will drop on the 10-year and the 30-year. I mean, come on. Did we really have to start a Friday off this way? But we're getting the final pullback to the bottom of the rotation zone. Now, into the open, if we break this little low area we spiked down to, which actually was the gap open area before we took off. So, we're going to be watching that. But if that breaks down, the key area I'm watching is about this 57.40 to 57.10 area. Worst case, there's still a gap from Friday the 9th left behind. But I'm really watching this area. If we take out the little lows that were caused by the Truth Social tariff rant, we'll call it. So if we take out these lows of 57, 56, 50, then I'm watching. Again, it's a wider range because we can get some selling pressure. But on the close, I'm going to be watching where we're trading now roughly to see if we bounce back. I'm really watching where we trade in relation to the rotation zone today, or if the worst is already in. If we do pull back more on a spike, I'll be watching for it to push back up going into the close. But if we close below the rotation zone, then I'm back to neutral mode on the daily. I'm going to be watching for a potential bottoming pattern next week. And then this secondary reaction is going to be critical because now we have an extended pullback. So next week is going to be very telling in a shortened trading week to wrap up the month of May. On a bounce now, this 58.22 to 58.20, 58.22 to 58.30 level is going to be very key resistance. And again, there is no short-term bottoming pattern yet. Now, we could rotate down, form a little mini double, which then I'd watch going into the open. We have not formed that yet. Hello, Christoph. EU is the new China. Thank you. Yeah. I already went on my rant this morning. What else we have? So that's what I'm looking in the NASDAQ. NASDAQ still above the rotation zone. Key area that I'm looking is closer to 20,615 if we spike back down. Okay, the key resistance now I'm looking at is just a little down from here. I'm going closer to about 20,950 as on any bounce play. And again, I'll be looking, if we do rotate down in the open, if we don't take out these lows, I'll be watching for the little mini double. Same thing in the NASDAQ. Other than that, if we take out those lows, I'm watching again closer to 20,615. Worst case I'm looking at is 20,500 on a bigger sell-off. That is major support and the flat 200. And then again, if we did spike down there, I'd be watching. That'd be a pretty harsh sell-off on a Friday ahead of Memorial Day, but I'd be watching how we closed in relation to the rotation zone. Good morning, Connor. The Dow has dropped below the rotation zone and below the 50 and trading against a key support level. So, paying very close attention because there's a fair amount of support base in here. a fair amount of support base, but if we start taking out this 41,250 area, the next key support is down around 41,050 to about 41.1. And again, going to be very patient today. Very patient. Key resistance is about 41,750 to Russell, which is the first thing to watch for in the rollover play, down the most. Remember, for any bounce plays, we're looking at the S&P and NASDAQ. For rollover plays, it's the Russell, and the Russell down to over 2%, which is by far the index that's down the most. Russell, very key support, it bounced off of right here. Very key support we bounced off of. So that is still the level of 1996. But I'm not really looking at forward to bullish patterns here in the Russell right now. Key resistance on any snapback rally, I'd be looking at around 2030. The VIX with the tariff announcement breaking definitely higher today. So there is a little key resistance above 26 is going to be very key resistance. If we start accelerating above there, I'm really focused on a continued drop. The DAX. Here's the results bouncing off the bottom of the rotation zone. Going to be watching today where it closes in relation to about 23,350. The yields pulling back. Yesterday did hold key support, but today with the sell-off in Russian treasuries, we're still pulling back in the rotation zone. Key level I'm watching on any continued drop is 4.42. Otherwise, it's being patient until Tuesday. 30 years has just pulled back only to the top of the rotation zone. So next week I'll be watching for a rotation up in the 30-year yields. Dollar index. Yesterday we bounced off the 62.5 and held. Today we're trading below it. So today I'm watching 99. If we close below there, I'm targeting the continued bigger pullback in the dollar. If we close above there, I'll still be going into next week watching for the bounce play. Crude looks like we could possibly be triggering the double top today. Possibly. We don't know how this is going to end up, but 60.47 is key on the daily closing basis. It's already been confirmed. Gold. Okay. Sterling asked a gold question. He's in a short position based off the triggered double top. Now, the triggered double top, the invalidation point, which is not necessarily where you need to stop, but the invalidation point is still at 33.97 on a closing basis. If you're already looking at just a retracement level and the 62.5, which is already bounced off of 33.64, he's also looking at, is this a percent B buy on the weekly? And it would be. So if the double is not technically invalidated or hits your stop point, okay, and if you were being aggressive, I'd be looking at that 33.60, just call it 33.65 level. If that closed above it, I'd be looking to unwind. Personally, can't give you specific trading advice, but I'd be looking to unwind a short positions, but not necessarily get in the long position just yet. I'd be looking to get established then in potential new long next week. Okay, we are at daily cycle tops, all right, and we don't even know how today is going to close, but we are at weekly cycle bottoms. So that's where I would be patient, watching for any pullbacks next week for potential rotation back up setups, because this whole, especially with the 50% tariff and the iPhone 25% announcement, throws key stuff, and it's really this 50% tariff on the EU. But who knows if that's going to, it could be walked back today. Who knows? But that's the way from purely technical analysis, Sterling, that I'd be looking at it. Let's Trump said, yeah, you signed energy orders for uranium and platinum is up for some reason. Platinum, I forgot. Again, from a purely technical position, we had a pretty key breakout. Which happened. Again, we're at key resistance. We broke above this little, what's been short term since last July. I mean, short term on a weekly. We've broken above that, hitting a very key level. So right now on platinum, I'm watching for any pullbacks in this key support level around 1045 to 1060 to hold. And then a rotation back up. Okay, we've triggered against the prior highs from May 24, but this is definitely looking like a breakout play in platinum as long as it can hold the daily rotation zone. Support at Path Trading Partners. Christoph. URA. Uranium, the key thing, we finished the double top. We actually spiked below the key level and then got a little reversal here. This is a weekly. Regained the key support area and then took out this little high. So again, I was being very patient until we took out that high again. And now the key levels that I'm looking at on uranium. Where's my retracements? Right here. We're trading right here. So I'm watching this 2850 area on a closing basis. We close above that, then I'm going to be watching for pullback moves and then rotations back up in uranium. That's what's key. That's what's key for me, especially pullbacks into the daily rotation zone. All right. We're getting the yields a little droppy in the yields on there. Remember, they're getting overextended. This is still, I don't think the worst is over for Japan, but at least you're getting a pause with these new tariff announcements and the yen. But the yen's continuing to strengthen even on those. So based off where this is looking to close today, I'm going to be patient and watching for the bigger pullback in the yen still. So more yen strengthening. Euro has not invalidated the double yet. Or sorry, the head and shoulders yet. 113.82 on a closing basis. It ran up there and is now dropping back down. Again, I'm not making any, unless we trigger, again, technicals play out, but other than that, I'm not making any sharp decisions today based off of Friday going into a long weekend because a lot can happen by Tuesday. Spiders, decent gap down. Trading 574.38. The bottom of the rotation zone is 573 area. 575.25 is now the key resistance area. If we did drop below 573, the next major support doesn't come into about 567. Not expecting that today, but that's going into next week. If we continued to go down, that's going to be a very critical area. Right here is going to be very critical. 50 EMA and the prior little breakout zone, and you do still have a little gap below there. The Qs, 500, it was the area I'm looking at, 500 to 520. We're still trading 504. These key lows from Monday the 12th, 501. So if we spike down, I'd still be watching 501, and then if that was broken closer to the 500s. Other than that, the key resistance is now 513 on any bounce back rally. So, Bitcoin also, Bitcoin's setting up the mark exhaustion signals, pulled back to the 200. Interesting to see Bitcoin drop, again, gold rally. But pulling back to the rotation zone, I'm going to be watching for we're coming out of overbought. I'm going to be watching to see how this reacts and possibly going into a more significant topping pattern next week. What else? I hope Sterling got his question answered about the gold. Other than that, Apple, the key thing I'm going to be looking at to see if we get at least any bounce around 192. The kiss it goodbye level is 186.22. Not for today. I doubt we drop that much. But going in next week, if it starts breaking down below there, remember, Apple is not cheap. It's still got a P to E at 31.54. So, but that's the key level in the short term I'm watching. Other than that, we had Intuit gapping up right to the prior major high areas from back in November. Intuit gapping up to this key reversal point. So if it did continue higher, this is where the reverse harmonics come in very helpfully. Very helpfully. If it did continue, you're looking at 737, 760. I'm going to be watching to see if it sort of tops out and wants to roll over. That is a pretty. It wasn't that amazing a beat to be up over 7%, but I'm going to be watching to see how it reacts and closes today, especially with very overbought going into earnings with cycles at the top. I'm going to be watching for potential pullback play on Intuit. I'm not seeing anything else today. Let's just peek back at the futures on the short term. Let's see if this qualified a double yet. And it did. So that's what I'll be looking at going into the open. Going into the open to see if we can get, again, this is aggressive. You're going against a bunch of rotation zones, so you have to manage this closely if you're going to try to do something like this. But it would need a little, going into the open, a close of about 57.84.75. And you see it's, again, the 15-minute, but that's a key thing. Now, if it rotates back down, here's a good example. So we hit this 75. So now let me use this as your example for bull strike cheetah. I want this one. So now if we come back up, and you see we're moving above this 62.5. If we were to close back above that and then roll back over and roll down again and go lower, it would not be a double on a 15-minute time frame. Okay? We've gotten too high on this side. It still needs the close above the 62.5. If we just immediately had selling pressure back down and it went to new lows, it would just be a spike up. If it spikes up above the 75 level and then we rotated back down, it would be off the table anyways. All right? So here's a clear example. All right, it's off. It's above the 75% level. So I don't care if it closes above the 62.5. It probably will anyways. But that's going to be key for me. If this rotated back down, then it would be off the table. There would be no potential double. I hope that makes sense, bull strike cheetah. That's a little rule of thumb thing you can put in your double study. All right, and anybody else wanting to learn doubles? Did you get your question answered about gold, sterling? I don't know if you were here or you got tied up with work. RDDT is what appears to be a triggered daily weekly double top that's good to the second target, and third target returns to a major level of previous resistance. RDDT. Has what appears to be a triggered daily weekly double top. Okay. Oh, there it is. Okay, I see it now. I got it. Let me just verify everything. I'm sure you did it correctly. So it just, again, for people learning, you see here it did not bypass this 131.92. It went above. So the two things that qualify the double went above the 75 and didn't bypass the 25% extension. So that's a fully qualified double. Now we have to double, at least from the retracement point of view. Now we have to check the targets. and you need these at least the second target to be within the candle bodies. Okay, so this is not in the candle body, so I focus on the second, and this is the extended target then. But my first major targets, and look how these line up. It's fascinating. Look at how these line up. Look at that spike low and where the first target is. And then you have the second one down here in the candle bodies. So this would be a complete, this is triggered. Now we have daily cycles at the bottom. So this is an example why I use a little stuff here and we're oversold. We have the crossing rotation zone. This is where I personally am patient. And, we bounce back because I watched between the trigger point and the candles that formed the base. Now that's a breakdown zone. So I personally like to see things snap back and then set up a little potential rollover play. Because I don't mind missing a trade. If this just plummeted to the first and second target and I wasn't in it already, then oh well. If I wasn't in it now, I'd be watching for the snapback. All right. So that's where that sits. Let me peek back. I hope that helps. Let's look at the tick real quick. I'm just trying to teach people as much as possible. Tick. Not that. I mean, that's below 1,000 and spiked back down, but that was not as low as the spike lows from Wednesday. So again, I'm watching for this, the bounce back. Here's a little 15-minute. So if this now rotates back down, it's confirmed. So now you still have to watch the invalidation point. Okay, but we're watching here. So the invalidation point now, remember, it's confirmed and you don't raise the thing yet. So the invalidation point would be back down to a trade below 57.63 or a close below 57.67. Other than that, at this point, it has to be traded pretty aggressively on the 5-minute. So any pullbacks, if this levels hold, see the candle bodies, see this shelf right here? On any pullback, I'd be looking for this to hold. If it starts closing below that, then I'd start watching for the bigger pullback and possibly the invalidation. These next 4 minutes are going to be key. All right. Thank you for tuning in, everybody. Remember, unless something major happens, no live stream on Monday because it's Memorial Day for me. So I will be back on Tuesday. But if you want to just check to see if a live stream pops up in YouTube because something major happened with tariff announcements or something else, then we might look, because the futures have a shortened trading day on Monday, and I will be looking at the futures on the Sunday night open. With that, I shall talk to everyone later. Have a wonderful, wonderful weekend. And for people in the U.S. who get a long weekend, hope you have a wonderful long weekend and get some extra rest and have a wonderful time with friends and family. Thank you for tuning in. Bye for now.